reaching its true potential. For years, this legal battle has created uncertainty, keeping institutional investors on the sidelines and causing hesitation among retail traders. But now, things are changing. Recent court rulings have shifted the momentum in Ripple's favor, and a final decision could be closer than most people realize. If Ripple secures a full victory, it won't just be a win for the company, it will be a turning point for the entire crypto industry. One of the biggest concerns for institutions has always been regulatory clarity. Without it, banks and hedge funds can't freely invest in or utilize XRP at scale. That's why many of them have been watching the lawsuit closely, waiting for the right moment to make their move. If the SEC is forced to admit that XRP is not a security, it would open the door for major financial players to officially enter the XRP market. This means billions of dollars in institutional investment could flow into XRP almost overnight. And it's not just about investment, it's about adoption. If Ripple wins, banks, payment providers, and financial institutions will have no legal barriers to integrating XRP into their systems. This would supercharge XRP's real-world utility, making it a key player in global finance. Even more importantly, this case sets a precedent for the entire crypto market. If XRP is officially ruled not a security, it forces regulators to rethink their stance on digital assets. It could pave the way for clearer regulations, making it easier for other cryptocurrencies to gain institutional acceptance. This is why the entire crypto world is watching this case so closely, because its outcome will have ripple effects far beyond just XRP. So what happens next? If a final ruling is in Ripple's favor, expect a flood of institutional money, major partnerships, and a rapid shift in how XRP is perceived in the financial world. But institutions don't wait until after the news breaks. They move in before the public realizes what's happening. And that's exactly what we're seeing with BlackRock and other major financial players right now. Let's break down why Wall Street's biggest firms are suddenly eyeing XRP and how this could lead to an unprecedented surge in price. For years, Wall Street firms dismissed XRP, treating it as just another cryptocurrency with no real future. But now, something has changed. BlackRock, Vanguard, and other financial giants are quietly turning their attention to XRP. And they aren't just watching from the sidelines. They're getting ready to accumulate. When institutions start moving into a market, they do it carefully, strategically, and before the general public catches on. And right now, there are signs that these powerful players are preparing for something big. So why are institutions suddenly so interested in XRP? It all comes down to utility and regulation. Unlike speculative cryptocurrencies with no clear use case, XRP is designed for real-world financial transactions. It offers fast, low-cost, cross-border payments, making it an ideal solution for banks, payment providers, and even central banks. This is exactly the kind of asset institutions love, one that has both utility and scalability. And then there's the regulatory factor. For years, institutions stayed away from XRP due to the SEC lawsuit, but now, as Ripple gains legal victories and the lawsuit approaches its final stages, the fear of regulatory risk is disappearing. The moment XRP gets full regulatory clarity, institutional money will pour in. Financial firms don't chase hype, they chase compliance and long-term potential. And XRP is one of the few digital assets that is positioning itself to meet both of those criteria. BlackRock, the world's largest asset manager, has already shown interest in blockchain and digital assets. They've launched Bitcoin ETFs, explored Ethereum, and now XRP seems to be on their radar. When a company managing over $10 trillion starts looking at an asset, it's not by accident. They move with purpose, and they move before the market reacts. Then there's Ripple's growing list of banking partnerships. Over 300 financial institutions, including major banks and payment providers, are already working with Ripple. This isn't speculation, it's happening right now. These institutions will need to hold XRP for liquidity, settlements, and transactions. The more adoption grows, the more demand increases, and with a fixed supply, that demand could drive prices much higher. This is exactly why Wall Street is paying attention. They know that when regulatory clarity arrives and institutional adoption takes off, XRP's price will reflect its true value. But by then, retail investors who hesitated will be left watching from the sidelines. The question is, are you paying attention before the big players make their move? And institutional interest is just one part of the equation. The real game changer could be XRP's role in central bank digital currencies, CBDCs. If governments and central banks integrate XRP into their financial systems, we're looking at a level of adoption that could send XRP's demand into another stratosphere. Let's take a look at how XRP is positioning itself for this massive shift in global finance. The global financial system is changing, and central bank digital currencies, CBDCs, are at the center of this transformation. Governments around the world are racing to develop digital versions of their currencies, and Ripple's technology is quietly positioning itself as the backbone of this new financial era. If XRP becomes the bridge asset for CBDCs, its demand could skyrocket to levels never seen before. Here's why this is so important. CBDCs are not just another crypto trend. They are the future of money. Countries like China, the US, the UK, and members of the European Union are actively developing digital currencies that will replace traditional cash. But there's a problem. These digital currencies need a way to move across borders, interact with other financial systems, and remain liquid on a global scale. That's where XRP comes in. Ripple's on-demand liquidity, ODL, is already being tested by banks and financial institutions, proving that XRP can act as a bridge between CBDCs and traditional finance. Imagine a world where every central bank uses XRP to facilitate international payments. Instead of relying on slow, outdated systems like SWIFT, governments could settle transactions in seconds with almost no fees. Ripple is already working with over 20 central banks, and the list is growing. If even a handful of these banks integrate XRP into their systems, the demand could become unprecedented. But it's not just governments. Commercial banks and corporations are watching closely. If central banks embrace XRP as the go-to bridge currency, financial institutions around the world will follow. That means trillions of dollars in liquidity could be flowing through XRP's network. And when demand for an asset rises, while supply remains fixed, prices don't just climb, they explode. The biggest players in finance are already preparing for this shift. The institutions that once ignored crypto are now building the infrastructure to integrate